Welcome back. So how about those markets? The Dow Industrials notching to an 11th record close since the election. That's yesterday. Equity investors liking the pro-growth policy ideas from President-elect Donald Trump. But is the rally going to continue? Joining us right now is Guggenheim Partners Global Chief Investment Strategist and Guggenheim Investments Chairman, Scott Minerd. Scott, good to see you.
Great to see you,
Thanks so much for joining us. So, big rally as investors react.
Huge.
As Donald Trump would say. Do you think it has a leg? Does it continue at
I
this
think
point?
so. Yeah, I think so, Maria. I mean, I think between here and the inauguration, the market's going to continue to discount the positive things in the program that the president-elect is advancing, I think we have the potential to be at the beginning of another bull market. I mean, or you could say it's the continuation of the bull market. So I think a lot of people that are talking about the Trump rally getting overextended are really being misguided. I think we have a long way to go here.
Kevin made a point earlier. It's not the whole market, right? You got technology has underperformed. There are a handful of sectors. You said it was a third.
Yeah, about a third of the S&P 500 has not participated in this Trump rally of sorts, right? So you've had some of the staples come down, utilities, REITs have come down, but we have seen financials up over 14%. Right. So where do people position themselves, given that there's now this dispersion between sectors?
Well, I mean, look, the technology, I think, got it way ahead of itself, and so I think we need a period of consolidation. But, some of the sectors you point to, financials, I think energy, those are going to be very positive. I think areas like materials, despite the infrastructure spending, could be challenged because, I think the supply side nature of the president-elect's plan will actually push the dollar higher and probably put a cap on, commodity prices.
What about what's happened in the 10-year with the move up in the yield on the 10-year? I think it closed at 2.39 roughly yesterday. What do you do with your bond allocation?
I'm going to make you a bond trader, Dagan, if you can have that. I would have said 2.4.
She's been watching rates.
The move up so quickly, and I'm a uber nerd deep down, so that's why I always go to bonds.
Well, I think that, that makes two of us. Yeah. I think people are misunderstanding the policies. They're talking about bond yields rising because of an increase in inflationary expectation. But when you look at things like tips, when you look at the exchange value of the dollar being so strong, these are things that are telling you that bond yields are rising in anticipation of a stronger economy. And so the big inflationary fears that people have about bonds, which would tell you that maybe rates are going, beyond 3 to 4%, which I've heard some of my peers say numbers like 6%. Right. Those are just unreal. We are not going to get an inflationary surge out of the Trump policies.
Isn't one of the reasons why, too, is because when you look across the globe, yields elsewhere are so low that they'll start coming into the U.S. market for those yields that have risen. So doesn't that put a cap on our yields?
I think so to some extent. I think that, of course, what you're also seeing is hedging costs for especially yen-based investors are becoming more and more expensive because so much capital is trying to come to this country and get hedged back into yen. So I do think that the central bank policies around the world will weigh on this. But our work shows that once you get the short-term rate back up to around 3%, you're going to have such a draw on free cash flow in corporate America that those are levels that are typically associated with recession. And so if you think about what a typical cycle looks like, when short-term rates get to 3%, the yield curve is usually flat, which means the 10-year note will be around 3%. And traditionally, the 30-year bond has actually been below the 10-year note. So today we might be close to an end.
Fed meets next week on the 14th.
That's right.
What's your anticipation? They raise rates. Is it going to have an impact on markets?
No, I don't think so. The market is already has a 100% discount on the fact that the Fed will increase rates. I think the big surprise, and I question how the Fed will signal it, is that the pace of rate increases based upon the Trump policies will probably have to increase. And so right now the market is discounting 1.5 increases next year. Personally, I think we're going to see 3, maybe even 4 rate increases in 2017.
Especially if we get 3 to 4% economic growth, which is what Stephen Mnuchin told us they're targeting.
Right. I think the challenge for the Treasury Secretary will be getting everything through Congress. So just like what we saw with Ron Ronald Reagan in 1981, the growth ended up being in 82 and 83. And so getting those policies through Congress could take a lot of time. And so maybe Stevens' projections, which I think are accurate to some extent, may not be met until 2018. But of course, the Federal Reserve, historically has liked to get ahead of the curve, and they clearly right now are behind the curve. So they need to pick up the pace of tightening.
Also, congratulations on your award. You received an award last night.
With Joe Biden.
Exactly.
Howard Schultz.
Well, thank you. It was a real privilege to receive the Robert F. Kennedy Award in the area of human rights, and not something I ever expected to receive, but it was a great honor.
That is terrific. Congratulations to you. We're looking at some pictures right here. How nice. You had your family with you.
Yes.
Great. Scott, congrats.
Thank you.
Good to see you. Scott Miner joining us right there. Guggenheim.